Welcome back to the Marketplace. My name is Winston Taki, and now to our first business story. A careful analysis of Bank of Ghana data and lending operations of banks has shown significant reduction in lending rates since the beginning of this year. Now, meanwhile, in this development, Universal Merchant Bank, Fidelity, and GCB offered the lowest interest rate on short to long-term loans for businesses. That's according to the latest Bank of Ghana data on the real cost of loans in the country. There is more in this report.
Businesses that wanted a loan over a year and turned to Universal Merchant Bank paid an average interest of 29.43%. That was the lowest and the best in the industry compared to other banks that were giving loans that should be paid in a year. For a facility reaching up to 3 years, it was Fidelity Bank that offered the lowest rate of 21.14% compared to its peers in that space. For a facility that will be paid back in 5 years, GCB Bank came up as the best bank for businesses to turn as they paid 25.60 interest. This was after the BAT. It is important to note that these are all facilities secured with the banks before June this year. This could mean that there is the likelihood you could be paying less or more for a new loan being processed this month. The annualized percentage rates, according to the Bank of Ghana, reflects the true cost of a loan when borrowers have to go through the approval process before getting the facility. The Bank of Ghana has argued that regular publication of this data will go a long way to help reduce the cost of lending in the country.
Now, let me bring my colleague George Wiafe in for more details on this lending rate. George, welcome back to the Marketplace. What more has this data on lending been saying?
So before I even give you more details about what more this data has been saying, basically it has to do with looking at the Bank of Ghana annualized percentage rate and also the Ghana reference rate, which has been the benchmark for lending in this country. And let's let our viewers appreciate something when we talk about the Ghana reference rate. Now, what does it talk about? It's basically the new reference rate that serves as a guide in determining the interest rate on loans. So remember in the past, we had base rate and all the rest. And it appears that the commercial banks and the Bank of Ghana have agreed on this new formula, meaning the Ghana reference rate, which includes interest rate, treasury bills, and inflation, and all these factors weigh into this determination of the Ghana reference rate, which is more the benchmark for determining interest rates in the country. You could look at the fact that it started with 2017 and the benchmark rate, which started at that time, was around 1682. So if you track the Ghana reference rate, and also look at the Bank of Ghana analyzed percentage rate, since the beginning of this year, it's gone down by more than 10%. You realize that it has been going down. You can look at individual loans hovering around maybe 20%, 21%, and that is what we looked at. We arrived at that projection about rates going down significantly since the beginning of this year to now.
Are we assured that the banks will use or peg their interest based on the reference rate in this dispensation?
It's something they've agreed. So if you engage all the commercial, don't forget that this Ghana reference rate, which has been the floor or the benchmark for determining lending rates in Ghana, has been agreed by banks. That is why the Ghana Association of Banks is actually championing this thing. Now, if you look at the 30th, on December 30th, the Bank of Ghana actually cut its policy rate by some up 300 basis points to 25%. Now, the Ghana reference rate at that time was around 23.69%. Now, that has dropped to, by, if you see the huge cut, to about 19.6% in August. Now, the GR has dropped by 10% since the beginning of this year, as I explained earlier on. Now, lending rate currently, if you look at this, and before we came, we did a tracking again, it's dropped somewhere around average, on the average, about 19 or 20%. So you realize this is something that the banks are committed to working with. And if the Ghana reference rate, which is the floor for determining the rates, have gone down by this margin, you realize that the average rate is also going to go down significantly in the coming weeks. And if you engage all these banks, it appears that this is what we're getting from them in terms of them working to reduce their lending rate by some significant margin in the coming days.
George, thank you for this insight. We'll certainly be coming back to you on some more details in other developing stories. Now, let's bring in a senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amoah, for some analysis on this interest rate cut and the latest annualized percentage rate. Welcome to the marketplace, Prof. And what do you make of the current interest rate trends for this year and the Ghana reference rate decline?
Thank you very much. For market watchers and industry watchers, the Ghana reference rate, which is a signaling rate from the central bank to the MPC, gives an indication as to what rates or cost of funds in the economy should be, considering some macroeconomic fundamentals and international developments that Ghana finds itself in. Like we rightly said, we started the year quite high, but then as we speak now, the Ghana reference rate, which has been stable for some time, has declined to about 25. No, the MPC rate has declined to about 25%, and that has fed into the Ghana reference rate that we are now talking about as 19.67%. Clearly, because it's more or less you can call it the industry average, the Ghana reference rate, banks will then have to use that particular rate as the beginning point in assessing creditworthiness, assessing borrower rates to charge, and then also pricing of the loan. What the individual borrower will get will be based on his or her risk profile score from the bank, and that will then inform how much the bank will add up to the Ghana reference rate, in addition to other intermediation costs that the bank in particular will have to incur in providing that particular piece of loan. So at the industry level, the Ghana reference rate will signal the rate, but for each individual borrower, it is based on your risk profiling that you pose to the bank.
Doc, are you convinced that the bank will respond accordingly to the lending rate or reference rate drop, especially when it comes to interest rate adjustment?
The banks have no option than to respond because it's a competitive space now. Mm-hmm. And if you look at the truth in lending, the proposition that Bank of Ghana is using now, once Bank of Ghana releases the MPC rate, it must be triggered into the Ghana reference rate, which was agreed by all the banks when this new pricing of loan was agreed some years back. And so the banks within this competitive space will find it very difficult to insist on a particular rate charge which may appear to be higher than the anticipated move in terms of direction of the rate. And so it will be very difficult now for a single bank to, by itself alone, decide not to reduce the rate going forward, considering what the other banks will be doing. So definitely going forward, one expects that cost of borrowing should decline across all industry players in the country.
What do you think of the consistent publication of the annualized percentage rate, and does it have any impact in cutting down interest rates?
So it borders on what you call truth in lending and transparency, where the lender, that is the banks, must open up and make the whole process as transparent as they can to the borrower. And from the reporting point of view, the policy guide point of view, Bank of Ghana also have to aggregate that and then release it periodically to the public so that you and I will have the opportunity to assess across the industry level what the banks are charging. That will inform our lending decision, and it will also inform our behavior when we are contracting for these loans. So it is good that in the name of transparency and truth in lending, the banks periodically, and of course Bank of Ghana, will release that information to the public so that we also process it and then take decisions as to where to borrow and where not to borrow from.
Thank you very much, Dr. Benjamin Amoah. Dr. Benjamin Amoah is a senior finance lecturer with the University of Ghana Business School. Now, in other development, the first Deputy Governor of the Bank of Ghana, Dr. Zachary Mumuni, has highlighted the critical role of the bank's gold purchase program in stabilizing the cedi and easing inflation. The second Deputy Governor revealed this at a program in London. Details in the following report comes to you now.
Deputy Governor of the Bank of Ghana also revealed that the gold reserve accumulation through the domestic gold purchase program has also helped in improving the country's credit ratings from restrictive default to be negative with a stable outlook. All these developments, the first Deputy Governor argued that has gone a long way in stabilizing the economy. He also announced that since 2021, the Bank of Ghana within that period has increased the country's gold reserves by more than 100%, whilst 86.7 tons have been sold to bolster the country's foreign exchange reserves. The Bank of Ghana rolled out this domestic gold purchase program as part of efforts to diversify its reserves, a move that could go a long way in helping stabilize the local currency.
Now, the Bank of Ghana gold reserves has reached 34.4 tons ending July this year. This was contained in the latest gold reserves update released by the Bank of Ghana. The report showed the Bank of Ghana, through its domestic gold purchase program since December last year, has increased holdings by almost 4 tons. Let's get more details on this with my colleague George Wiafe, who is here again with me. George, it's good to see you again.
It's good to see you again as well.
Amazing. Why did the central bank introduce this gold purchase program in the first place?
So it's interesting that even though we produce gold and we even export, when it comes to gold as an asset or a reserve for a central bank, was quite small. And the Bank of Ghana argues that it is good to build gold reserves in more of mixing our assets or more diversify our assets to ensure that even though we have dollar cash, we also have gold. And that is why they pressed ahead with this. Let's get our viewers some details on this. Right. And you look at the Bank of Ghana, if you look at since they started this program in June 2021 to now, they've seen their gold reserves actually jump by more than 400%. And ending July, we have 34.4 tons in July right now. Basically, they thought that they could build up gold reserves in addition to the dollars that they have. Bank of Ghana has actually purchased 145.94 tons of gold since June. 95
tons, yes.
Yeah, since June 2021. You ask yourself, where has all that gold gone? Especially when we have a situation where ending July we have 34. Now, it appears that part of this was used for the gold for oil program, and also 86.77 tons was actually sold in return for dollar cash to back our reserves. Don't forget that from January to June, the data suggests that Bank of Ghana might have pumped almost about $4 billion to support the local currency. So they took part of this gold, sold some to build our dollar cash reserves, and also used some in exchange for the gold for oil program. So you've seen that around 227.63 tons of gold was used as settlement for 1.9 million metric tons of petroleum products when it comes to this whole gold for oil program. It suggests that there was a gold for oil program.
Amazing. What impact has this program had basically on our economy, our currency? Let's say basically on our economy.
If you go through the same Bank of Ghana data, now they tell us that they've been able to diversify their foreign exchange reserves. If you go to other countries that their currencies are strong, the British pound, they have strong dollar or more of gold backup or reserves. The same for the US dollar as well. So it means that at any point in time, they could rely on these reserves to support the local currency. And that's what they see. They've been able to diversify their reserves. You have dollars, you have the investment, and then you have what they call the dollar cash itself. Also leveraging on Bank of Ghana holding to raise cheaper short-term capital. With this strong gold reserves, the Bank of Ghana can use it as more of a collateral to raise some short to long-term funds to support the economy. Also build confidence in stronger reserves to stabilize the city. Now, what people would bet on your currency is that what is your state of reserves? Do you have strong reserves? Do you have enough gold? If the market knows that you have enough gold, you have enough dollars, they might not speculate on your currency. And that is what this gold thing, through this domestic gold purchase program, has done in the local currency.
Thank you, George, for this insight. We appreciate this detail that has been brought to us here on the marketplace. Now, let's go on to Zoom and speak to an economist, Dr. Edu Owusu Sarkodie on this gold purchase program and the Treasury bills auction. Doc, welcome to the marketplace. Now, looking at the impact of this gold purchase program on the economy, can we say it was indeed needed badly as at that time?
Well, yes, gold for reserves program has been effective. Started by the NPP administration. We know how Dr. Bawumia was so interested in this program. He rolled it out. Unfortunately, they lost the elections. NDC won, and they have continued with this program or with their gold board issue. So it is needed. I think that any country with a strong reserve stands a better chance, as George said, to build confidence. It is important to leverage what we have been blessed with. You know, God has blessed us with abundance of gold, and therefore we must leverage it. It has helped us in the stabilization of our city. So I would say that we can do better. We can do better. 34 tons gold savings or holdings is not enough because if you look at how Ghana is the #1 producer of gold in Africa and #6 in the whole world, let me give you some statistics. That's why I say it is not enough. Last year, we produced 130 tons of gold in Ghana. In South Africa, they produced 100, yet Ghana has a holding of 31 as of last year, and South Africa has 125 tons of gold holdings or reserves. Let's go to the whole world. Mexico, Ghana, and Kazakhstan all produced 130 tons of gold last year, and yet Mexico is holding 125 tons of gold. Kazakhstan is holding 382 tons of gold. Uzbekistan, which even produced lower than Ghana, they produced 120 tons last year. They are holding 367 tons of gold. So Ghana's 34 is woefully inadequate. I must say that I commend the efforts by the previous government and the current government for trying to hold more reserves. But the point I'm making is that based on our capacity, based on what we have been producing, based on our potential, we can do better. The target for us should be at least 100 tons in terms of gold reserves. That will put us in a better position in whatever we find ourselves in terms of our current account, in terms of our capital account, in terms of our reserves. It will put us in a better position to further stabilize our city, and we will not be thinking of any drastic city depreciation if we have at least 100 tons of gold reserves.
Okay, Doc, are you surprised at the acknowledgement by the Bank of Ghana about the impact of the gold for oil program on pricing of petroleum products, which has become quite insightful in their latest report?
I'm not surprised, except that, there were people denying the fact that there was no gold for oil program. Now we are all aware that there was a gold for oil program. Last week I had a lecture, I attended a lecture by one of the professors. He's a Ghanaian, and he really stressed on the point of even barter system, where he says that once you have something in abundance, just exchange it for something you don't have it in scarcity. So I was surprised that they said there was no program like that. But now we all know that there was a program like that. And I think that we could do more and leverage. I stress the point. Let's leverage what we have to get what we don't have. We have gold in abundance. Leverage it to get the others. Crude oil. We don't have crude oil in abundance. So Nigeria, for example, so Ghana can be doing better with Nigeria. We have gold. They have crude oil. So let's exchange so that we will forever have crude oil in our deposits. So it is a good thing that is making impact on Ghana's crude oil price, is making impact on the stabilization of our city, is making positive impact in our economy. And it is good. We must commend the governments, both the previous and the current ones, that they must continue. What we don't want is the corrupt practices. They should just get rid of all these corrupt practices, and then there hasn't been any report, but I'm just saying that, as human as we are, as the program begins to kick in and it's making waves, it's making progress, people will try and find ways and means, embezzling funds. So we should try and get rid of this.
Finally, Doc, government is once again struggling to meet its auction target for the T-bills. Are you worried or are you surprised by this current development?
I'm not surprised because the policy rate has been falling, and the reward for people lending their money to government is falling. So if the reward for me giving my money to government is falling, I wouldn't want to give my money to the government. I'll find alternative ways of holding wealth. I don't think it's too bad. It is good in some way for, I think the positive outweigh the negative because the government debt service will fall. Inflation has been falling. Policy rate is falling. Our city is appreciating. So all these are indications for a fall in the TB rates. Going forward, even if the government doesn't get what they wanted to raise from the T-bill market, they can raise other portfolio like the bonds or go into domestic resource mobilization. As for raising your revenue domestically, nothing can affect it. You can always have enough funds to develop your country. So I think that the positives outweigh the negatives.
Thank you very much, Dr. Edusa Akwadiye, for bringing us this insight here on the marketplace. That's all for business. For more update, visit myjoyonline.com/business. My name is Winston Taki. Thanks for watching and have a good business day. Bye-bye.